After price action, the next important thing is indicators. I'm going to emphasize only few indicators that I use, and there are a lot of other indicators. You can dive deep into the indicators and you can find which one you like and which one you don't like, and you can find the information on how those indicators are built and the formulas for those things. You can find anything if you are willing to learn. First one is the moving averages. With this moving averages, you can find the trend when it is in a direction and when it's broke out of the range, and the pullbacks and the trend reversals. You can find out everything with this moving averages, and it is going to connect all these points like this. And the trend change also it is going to show you. If you don't know any other things, price action or any other things, even a simple moving average is going to show you this. And in a sideways market, it is not able to identify that is a sideways market or a directional market, but you are going to chopped out in a sideways market if you use moving averages. I hope the point is clear on moving averages, and I'll suggest using a 20 days moving average, that is 20 EMA or 20 SMA. If you want to use fast moving averages, and for scalping, I'll suggest 9 EMA. If you haven't checked my scalping strategy video, you can check the scalping strategy video where I discussed the entire strategy from entry, exit, risk management, trailing SL, and panic exit levels. Everything I discussed. If you haven't checked, just check it. If you watch that video, you don't have to take that strategy. You can build the strategy with the same concept. Whatever the points I have included, you can create any other strategy with those points in mind. You can use that like a framework. And the next is after 20 days moving average, it is 50 days moving average, 100 days moving average, and 200 days moving average. With the 200 days moving average, you can identify the trend on bigger time frame. And one more concept I want to break is if you are using a 1 minute time frame and 100 days moving average. Let's assume you are using 100 EMA, and this is 100 EMA in 1 minute time frame, but on 5 minutes time frame, it is going to be the same value is going to be 20 EMA or 20 SMA based on whichever indicator you are using. It is a 20 EMA value. If you are using a EMA here, 100 EMA. Here on 5 minutes time frame, it is 20 EMA. I hope the point is clear. And the same for 200 or any time frame. If you are using a 20 EMA in 5 minutes time frame, and in 10 minutes time frame, that is a 10 EMA. You should be able to read that, and that is an advanced concept. You don't have to do that, but I'm giving you in advance. If you haven't able to understand this concept, just leave it. But if you are able to catch that point, let me know in the comment section. After moving averages, the next indicator is RSI. With RSI, you can identify the trend strength. If the trend is bullish and there are any pullbacks, you can see whether those pullbacks or the trend is going to change. There are concepts in a RSI, relative strength index indicator, that is a bullish divergence and bearish divergence. If you don't know how to find out, you can use in a trading view. If you apply those concepts, let me show you instead of explaining. Here I am searching for RSI in trading view, and I am going to apply one of these indicators, RSI, relative strength index. If you check the settings, you can see, you can identify this calculate divergence. You can just select this option so that you can see the divergences. Just select this option and click on OK. And here you can identify the divergences. Here there is a bullish divergence because it made a low and RSI not able to break this low. There is a divergence. Here it is a bearish divergence. Here it showed earlier itself. It is breaking these highs, but RSI is not able to break the previous high. And here also, so it showed a bearish divergence. Here you can see the fall, and we have seen in a previous concept that how we can identify this trend reversal. This RSI also given the same concept, and here bullish divergence. It gave a bullish divergence and the market went higher, and here it gave a bearish divergence, but that didn't happen. There is a bearish divergence. Here also bearish divergence, but that didn't happen. And what happened is a breakout. And along with this, you should see which side the breakout is happening. There is a bearish divergence, but the breakout is on the bullish side. Then you should not take the bearish divergence. If there is any breakdown, then only you should take the bearish divergence. There is no breakdown. This low not broken, this low not broken, and this low is also not broken. So there is no point in taking the bearish trade. The trend is clearly bullish. We are going to see the divergences to identify the trend reversals, but that didn't happen. I hope you are getting the point. And the trend is clearly bullish. It is broke all these levels one by one. First it broke this level, after that it broke this level, but what happened is in RSI it is not able to break the previous highs until this point, and from here it broke this level, and again here also it made a high, it broke this high, it is not able to break this low. There is a bearish divergence here, but it did not indicate here in this point, in this high, and this high, it indicated a bearish divergence. I hope the point is clear with RSI. You can use it to identify the trend strength. Above 60, the trend is strong on upper side, and below 40, the trend is stronger on a lower side. You can use different values also. I'll use 60-40, and you can use these divergences in RSI. And the next one is fib levels. We have seen moving averages, RSI, and the next one is fib retracements, and one of the important things is fib retracements. By using fib retracements, you can identify the pullbacks and whether it is a pullback or a trend reversal. Let's check it in the chart. Let's remove this indicator. Okay, let's use fib levels. There is a one leg after breakout from here to here. Let's see. Let's apply this fib levels from this low point to this high point. Let's zoom in a little bit so that you can see clearly the levels. I hope the chart is clear to you. It made a low here. This is the first 5 minutes low, and this is a high point. This is a high point, sorry. This is a first leg's high, and whether this is a pullback or trend reversal, we can know by using these fib levels. And we are going to give high value to this 0.5 level and 0.6 level. If it's going to bounce from 0.2 level, this is a strong trend, and 0.3 level also, it is a strong trend. And here it broke this 0.5 level, and it tried to broke this level 0.6 level, but from this 0.6 level there is a buying, non-stop buying for almost 20-25 minutes, and after that there is a breakout. If you see in a smaller time frame, there is a breakout, and after this breakout there is a non-stop rally. And next, if we apply this fib indicator from this low point to this high point, now also you can see it respected this level perfectly, these levels. This will work on any chart, but you need to know how to apply and how to check these levels. It made a high from this low point. It made a high, and this is a 0.2 level, and this is a 0.3 level, 0.5 level, and 0.6 level. It broke this 0.5 level, and from this 0.6 level there is a buying. It made a high and it consolidated, and even if you see the breakouts, there is a breakout pattern around this point, and from that point there is a non-stop buying. I hope the point is clear. From that point it moved non-stop higher, and there is a pullback here as well. Let's just check that also, applying this fib levels, and this is a low point. For this swing, this is a low point, or this is a low point, and this is a high point. Let's check. It should have tested 0.2 level. It retested 0.236 level. Even if you checked from this point, it worked out. It bounced from that point. If it's breaking this high, you should understand by touching this point and it is breaking this high, you should understand the trend is strong. And from this point also, it tested 0.236 level. I hope the point is clear. You understood the point with the fib levels as well. And there are a lot of other indicators also. Pivot points. One of the important things is pivot points and the volume profile and Donchian's trend channel. There are a lot of indicators. You can master each one at a time. From my end, I can give this as study: moving averages, RSI, fib retracements, and pivot points, or you can use the CPR, central pivot range, and Donchian's trend channel, volume profile. All those things you can study. If you're watching this video in a technical analysis mastery, this is one of the videos in this series, and you can watch all these videos that are published on my channel. You can just go to the playlist and you can watch these videos. If you want to become a master in technical analysis, watch all these videos and practice in real live markets with a smaller capital. If you are a beginner, practice with a smaller capital along with the risk management. If you like the video, subscribe to the channel and turn on notifications. Thank you for watching. We'll see you in the next video.